Checking on the Greater China markets, Hong Kong's Hang Seng has started with the positivity of about 150 points there, tagging on to the positive handover from Wall Street of last week. This was thanks to the better-than-expected non-farm payrolls report, that data coming in on Friday. Add to that the fact that we have higher odds now, given that lawmakers are even closer to passing that Biden stimulus package to the tune of $1.9 trillion. Markets on the mainland are sitting stronger, 1% stronger on the Shanghai Com as well as the Shenzhen Composite. And we also did get that strong data on the weekend from China on the exports growth as well as imports numbers. So that might be providing that tailwind for the markets. Zooming in on shares of Chinese software firm famous for its beauty cam, Meitu. It soared 14% at the open this morning after the company snapped up $22 million in Ethereum and $17.9 million in Bitcoin to help diversify its holdings. Well, for a chat on the broader markets, let's bring in Lee Kian-soon. He is CEO and fund manager at Astral Asset Management. Kian-soon, you are still very positive on the bull market. And do you see 2021 as a year where it's going to be led more by the cyclicals than tech? And what would that mean for the energy stocks, given oil prices have been rebounding of late?
I think 2021 will be led by the economic recovery as we have seen globally. I think 2020 was a very difficult year where most of the economies globally has contracted and therefore provided a low base. So for 2021, we're definitely going to be seeing economic recovery led by China and US. These are the two biggest economies in the whole world. And we're going to see that happening, and sector rotation is definitely happening as there will be more interest in the recovery story like energy sectors. We're seeing that oil prices has gradually increased as resumption of consumption of oil has continued to be strong. And we will also continue to see the rotation out of tech sectors into these recovery sectors.
Can I just get your thoughts on the Chinese banking stocks? CSI 300 Bank Index, that surged 12% since the start of the year. We had the banking regulator last week saying that the Chinese lending rate might rise in 2021 because the market lending rates are rising. But are these stocks cheap for good reason?
I think Chinese banking stocks have always been cheap. And the reasons is the international investors always find it very challenging to fully understand the NPL situation and the balance sheets of the Chinese banks. And hence, we always see a huge discount, as you would obviously notice that these banks would easily give you 4 to 5% of dividend. And despite that, the interest by the international investors has always been more on the cautious side. I think the recovery or the recent surge of banking stock shares is very obvious. I think the Chinese banks have shown that they are so far being able to cope with the COVID-19 situation very well. And we could see that there are some positive government policies for the finance sector. And I think that's why we could see part of this rotation of funds into the banks.
Where do you see the Chinese tech stocks, though? Because, there's that concern that growth is a bit overvalued now, even in China, not just a US phenomenon.
I think globally, the tech stocks have a challenge of being, too high on the valuations. And it all depends, I think, ultimately, when earnings seasons come, if the earnings growth is as strong as what these tech companies has promised. And if the tech sectors continue to deliver earnings growth that is as spectacular as their valuations, I think the share prices will continue to be strong. Having said that, if you include the telco sectors in Chinese telco sectors as part of tech, I think the Chinese telco sectors will be an interesting sector to actually take note, given that they have successful rollout of 5G. And I think it's going to be a sector that will see a strong recovery as well as growth this year.
Okay. You mentioned earlier that when it comes to the global economic recovery, the heavyweights, US and China, set to register, upwards of 6% growth. Although China last week did come in with a less optimistic or more conservative than some economists had been expecting on the GDP growth for 2021 at just over 6%. Some had been expecting 8%. Does that affect your outlook then?
I think the GDP forecast by the Chinese politicians during the parliamentary meetings in March has always been conservative, and historically they always want to deliver above the target that they set. So in terms of ranges, definitely 6% I think is a low target, and which the conservative estimates of what the Chinese aim to deliver. If you look at that import exports numbers and you look at the kind of resumption of manufacturing activities and the resumption of domestic consumption, I think they will safely deliver that target, and it will be more in the higher range of 7 to 8%.
Kian Soon, it's been great chatting with you. Thank you so much for sharing your insights with us this morning. Lee Kian Soon, CEO and Fund Manager at Astral Asset Management. And that